Welcome back. You're with us here on Opening Fire. The markets recovered, and how? I mean, 86, 87 odd points lower. I mean, only 86 points lower. I think that's the way to kind of sort of put it, because it looked pretty dramatic and then it all sort of came back. More than 100-point recovery on the Nifty from the day's lowest level. So this is quite good. I mean, actually, and things are looking better and better. 280 on the Sensex, 25,985. Banks, and how should we read the last of the lot as far as banking results are concerned? 4 large banks reported numbers on Friday itself. Vaibhav Agrawal is joining us right now. He's banking analyst with Angel Broking. Vaibhav, the full picture really. So, gross NPA levels came off, but we have the fresh stressed asset formation, slippage from restructure to NPAs, etc. What's the verdict on the 4 large banks which reported on Friday? Are things progressively getting better? How would you describe it?
Keeping aside Bank of Baroda, which was in a sort of a transition quarter with the new management, coming in, so there was obviously some element of one-off in their results, which should hopefully come back, back on track from, subsequent quarters. But, if you look at the other ones, at least there are clear signs of, plateauing in asset quality in terms of the rate of accretion is plateauing. SBI did report reasonably good set of numbers. In terms of slippages also sort of coming down, and the pace of accretion has clearly sort of stabilized for a number of these larger PSU banks, especially the ones, and that is the clear finding that we have, that the ones who have actually slowed down their loan growth over the last 2 years the most, and have already seen a lot of pain over the last 2 years. They've got very seasoned loan books now, and from those loan books the incremental rate of accretion is now sort of stabilizing.
But can we call this a change in trend, or it's too early to call it? I mean, although I think for some banks you have 2 quarters of betterment, or at least things not worsening. But the numbers are so large that anything is possible, isn't it?
Well, I mean, you're correct on that part, that after all, it is a sort of a lumpy corporate slippage kind of a cycle. So, those kind of lumpy NPAs can come up. We even saw it in a private bank like Axis Bank. 1 or 2 lumpy accounts can spoil the picture for a particular quarter. And the fact remains that several of these sectors like metals, etc. are still in trouble. So we would not go so far as to say that the problems for the sector are as such over, because, the underlying borrowers are not yet, back on their feet completely. It will take quite a bit of time. It's just that those banks who've been, slowing down their lending growth quite a bit, at least for them, the pace of accretion is now stabilizing. But, like you mentioned, in absolute terms, the amount of slippages, etc. is still large enough that they are not really able to, sort of report any meaningful earnings growth. Earnings are still sort of, maybe apart from an SBI broadly, if you look at the PSU pack, earnings have been very flat on a year-on-year basis, and net NPAs, even though they're not increasing at that fast a pace, but still there is about a, 6 to 7% kind of increase QOQ that we are seeing. So things are not as bad as they were maybe a few quarters back. But yeah, obviously, the sector is not completely out of the woods yet.
So Bank of Baroda, where there was a cleanup exercise, we've seen this with other banks as well, but this time the top management is from the private sector at Bank of Baroda. There was an analyst meet, I understand, in the afternoon on Friday. Is there anything that you heard there which kind of stands out? Any change in strategy at Bank of Baroda which is important to note?
Things were, of course, talked about, on 3 or 4 broad directions in which the bank needs to improve. But, I think as the, MD himself pointed out, that the key lies in execution now. And, that is what the street would be watching out for. There are a lot of expectations in case of Bank of Baroda, which are actually built into their valuations as well. And, because we've even heard, past CMDs for many PSU banks talking about their, sort of medium-term targets of improving various operational parameters, etc. But it ultimately boils down to actual ground level execution, and that is what the street is expecting from Bank of Baroda. And if they can actually deliver that quarter on quarter, that's when these kind of valuations would get vindicated.
Which is your top pick now there in the PSU space?
Yeah, so within the PSU pack, actually the one we like is in fact SBI. Like I was mentioning, we are preferring those PSU banks, and right now we are still cautious on almost all of them. But for an SBI, there are a number of positives. Like I said, their loan growth having been consolidated over the last 2 years or so, now their asset quality is at least stabilizing to an extent. Plus, of course, the capital adequacy is extremely strong, and ultimately, SBI structurally is cut above the rest of the PSU banks. And right now, in fact, even in valuation terms, we're getting it below book, and almost at similar valuations as even a Bank of Baroda. So, in that sense, combining these factors, SBI is the one that we like in the PSU space.
Quick conversation today. Thanks very much, Vaibhav, for joining us. Appreciate it very much. Happy Diwali from all of us here, Vaibhav. Thank you.
Same to you. Thank you.
Take a break here. We are back in 2. We'll come back in 2.